All right, thanks everybody for reading that. The planning and scanning for this week, we've got 5 days worth of work in 4 days, right? So we've got a European central bank. We're back to pins and needles. What's going on with the world? I made a comment about Amberilla and the kind of volatility that we're seeing. Just to share with you, Amberilla in the pre-session hours, when the report came out, traded all the way up to 74. Next day, trades all the way back under, just darn close to 64, and then settled right a penny under 67. That's a little bit of volatility for a market, especially as you can see here. It did beat both top and bottom line. So people were thinking that this thing was going to go up, and as I was saying in the last week or so, this is an environment where we start to see, and let's take a look at the SMH real quick. We start to see a lot of seasonal changes take over, and what was once strong might be a little bit weak. And so right now what I am using is Thinkorswim's platform, and I'll be fair and go through a few others, but this is the an hourly chart. Let's get over to daily chart. This is the daily chart on the SMH itself. Now using my person's pivot, I have monthly pivots up here. I've got the PPS indicator with buy and sell signals. So the SMH, the last known signal was a buy signal on 8.5, and so it has rallied, right? I don't have a clue as to the integrity, whether it's going to peak out this week, next week, or in what hour, but we need to take a look at this market and see what kind of inherent strength or weaknesses do we have. And quite frankly, even on an intraday basis of 4 hours, it's funny because the market is well supported with strong volume, as indicated with using the on balance volume tool. All right, now let's take a look at one that I was talking about 2 weeks ago, INTC, which has a heavy influence on this subsector ETF. It's Intel. Now, with looking at Intel real quick, on the surface, the stock looks like it's posed to, just explode to the upside. And what I'm looking at is, while we have a high of 37.90 up here, we have pivot at 37.13. Yes, we have a great little breakout with the OBB showing that Intel can in fact move up. I'm thinking that that's going to be, as I said, the potential that this thing could blow off to the top and then get us into maybe that double top as we turn into a seasonal weak period. I think the stock is going to be one that's going to come right back down by January into that $30 mark. So this is kind of what I'm looking at and using longer term analysis along with some proprietary indicators. So let's take a look at those. All right, so this is Tradestation. This is my own little personal indicator that it smooths out volume readings. This is a volume indicator, and as you see, here's the green and here's the old. And looking at a chart, we are making newer highs. We're starting to show that little bit of divergence. Looking at my momentum indicator, every time we seem to have a strong peak and we start to see the market rally and then peter out a little bit, is the momentum indicator is starting to slow down. Now, this rally here in the weekly chart of Intel is doing the same characteristics. While the on-balance volume looks strong, the my smooth volume indicator does not share that same opinion. In fact, you can see even on a daily basis, we're starting to form a significant divergence pattern, as well as a divergence pattern in the momentum indicator. All right, so how reliable is that? Now, before I get into this, and I wanted to share with you Amberilla, and the reason I'm beating Amberilla up and focusing on it, while it was not, and I repeat, it was not a trade that I put into the weekly thoughts and observation. It was a trade that we did in our own trading room. Many of you that are subscribing, that do get the weekly thoughts and observation, are in the trading room. So what did we see with Amberilla? What the trade that I did was a 67.64 vertical put spread, and rode that into the very last minute and got the heck out of Dodge right as that market had puked. And I mean, many of you were there in the trading room as we were able to get out of the 67 put for $1.50 right at, and then covered back the short side of the 64 put for 15 cents. A win-win. It was an exciting little trade. So, and it was down to the wire. But what did I get myself into this trade for in the first place? And it was real simple. We started to see the market rally. My momentum indicator at the time was sharing to me that this thing was losing steam. We also had, if you notice here, a very significant move in price, but not with the volume indicator, and it's kind of opposite of what this OBV looks like. In addition, look at my weekly histogram and the volume indicator. It's a volume indicator here, as well as the momentum indicator was starting to say that this trend was losing momentum. So again, this is not a trade that went into the weekly thoughts. This was a trade in the trade room only. But I just wanted to prove to you, or share with you, not quite prove because there's nothing that's 100% in this world, but I wanted to share with you there are some indicators there that are working dynamically in this market environment. In addition, there's a lot of moves that are happening that everything's looking great one second and then next they're taking it away. So just like with Ambarilla, it beat earnings top and bottom, rallied and failed miserably. That is a huge whale of a move on an intraday or overnight trade for any individual stock, and that's what we're seeing. A lot of stocks are very vulnerable for these corrections. Now here's I didn't put this in writing, but I wanted to share with you right now, the QQEW. Again, I didn't write about it in this week's issue because I could just write about everything I look at, but it would take forever. But I just wanted you to say, and you couldn't really read or trade everything anyway, right? So let's take a look at what's happening here. This is the QQEW, and when I see a market rally and I see that momentum start to fade, right, I get really nervous that the market's getting ready for a correction. Now, again, this is the equal weighted Q NASDAQ 100. Last week we formed a doji, right? We didn't close up positive, we formed a doji. Now, the volume here is pretty strong, but relative to this last price, it's not great, number one. And number two, we are starting to see the histogram component of the volume indicator show some relative weakness. So there is a cause of concern in the market in the QQEW. The area of weakness that we might find influencing the NASDAQ would probably come from the biotech sector because, again, the biotech sector is the weakest link in the chain. And in fact, biotech, the IBB, is in a weekly sell mode already, right? The histogram, I mean, here's another just case in point. The market rallies, as you can see. We get this rally here, and as the market's kind of moving sideways, we start to lose momentum. And again, that's kind of a very key critical observation. In addition, the momentum volume indicator, we did make newer highs over time, and everyone can see this. We made newer highs over time. Guess what? The volume histogram component made a volume divergence pattern. So while we were buying down here, and many of you know that, we got out a little early, it since has not done anything. But if the biotech decides to come back a little bit more over the next week or two into the 260 handle, that's going to weigh in on the Qs. All right. In all fairness, let's take a look at what the on-balance volume revealed. And the on-balance volume would have revealed that, hey, this market's moving up and the volume's a little bit stronger, right? My indicator smooths that all out and says, no, something's wrong. Something's not as great as life would want us to believe. And so I'm not sure longer term, if we take a gander at the charts, this market is seriously having a hard time breaking out and continuing with a rally on strength. So where would weakness come and play a part of the NASDAQ 100? And it might just come from the biotech. What stock specifically? I would say AMGN, number one, Amgen. Amgen is one that it's in a significant trading range, number one, and you can see what I'm referring to. Here's the trading range right here. So we're in this little. I couldn't draw a straight line to save my life. Wow. We are in that little trading range, and if you note here is the trading range. Look at the momentum and look at the volume. Wow, what Would that make me nervous? Absolutely. In fact, it did form, this isn't really considered a doji right there, but we are in a weekly sell mode, and I will probably be looking at Amgen for any kind of intra-week strength to sell and send you guys out a email alert on that. So why not just get ahead of the game and sell? Well, you know, we have this little moving average cross right there, and I think the market might try to have one more pop to the upside. We didn't fall relative. The on-balance volume didn't get crushed. My indicator is showing, while prices, see that low and see this low, they're lower. My volume's higher, so it's showing a little bit of, believe it or not, bullish convergence, which signifies that we might see a short-term pop up first and then potentially a failure. So Amgen is one that I think we need to kind of focus in on as to the leadership, because this has a very high correlation to what's been going on with the Qs for the last 2 years, and we covered that in the trading room. All right, let's move on to one other case study, and then we'll get into this week's upcoming trade. Case study, Costco. I've been talking about Costco for several weeks now. I did not put an official sell recommendation in the weekly thoughts and observations. One is because it's a weekly advisory service, and two, we covered this in the trading room multiple times. Now, let's take a look at the three indicators here using, and then I want to go over some interesting stuff about the PPS indicator. So here's a sell signal. As you can see, we kind of have that little higher high and that potential M top at the time. I guess you want to call this a potential M top formation. As the market was moving higher into this time frame, right, the on-balance volume looks like it's supporting that, but my volume indicator is clearly pointing straight down. And I mean, you can see it down, you can see as this rally was unfolding in here, and I got too many lines, so I guess it kind of would make it hard to see. So here's the volume, here's the old highs, here's the highs, and when we get to this higher high, where's the volume? Wow, right? On-balance volume is not as effective. I've been saying this for this whole year. I don't know why, but on-balance volume is not as effective as it once was. I started talking about this in 2008, and we really did a phenomenal job of taking advantage of it. But this year, especially with gold and the GDX, I've noticed that the on-balance volume is less effective. But my volume histogram tool has just been powerfully knocking the ball out of the park. In addition, look at the histogram component of my indicators here. You can clearly see as this market made a new high, look at this and look at that. You can clearly see divergence there. And this is something, by the way, we are going to go over in detail in the seminar in September, our 3-day seminar. So if you're coming down to the seminar, you're going to love this, right? So here's what's interesting. We get a sell signal. And you know, I've been talking about Costco, but from a fundamental aspect, I've been covering Costco when they got rid of American Express. They have the Visa, and we've been discussing this. I said, listen, that's not good, because if you go there and you don't have your Visa and you want to, you know, I mean, everyone pays their credit, for the most part, most people pay their credit card bills, right? But when you have that American Express and you got the points and you see, oh, I'm buy this, buy that, it's on the card, what do I care? I just write a check, move money around from one bank to another in the next billing cycle. Who cares, right? But when you go to the checkout line and they don't take that American Express and you don't have your Visa and you have MasterCard, it's a PIN and it's cash and it's your debit card and it comes right out of your bank. And that's like paying cash. Psychologically, people will buy less if they know they're paying cash. It's just a psychological, and I've been giving that, and I didn't come up with that study. I think it was on Fortune or Inc. magazine. Someone, it was kind of interesting because it applies to me too. If I have my weekly allowance that Mary gives me, and yes, I am kept on a short leash. If my weekly allowance, and I have to pay for something cash, or can I put it on a credit card, I'm most likely not going to buy it if it has to come out of my cash or my wallet. It's just psychological. With that said, I don't know if that's the real reason that Costco's sales or the price had declined, but it was on comps not doing as well. But here's a funny thing about this. Let's take a look at when the buy signal, the sell signal was triggered, and then I'm going to show you something that's pretty interesting here. We're going to go a window, and you can see the sell signal here is on 8:18. And we've been talking about this for several weeks. Many of you know that. In fact, we covered it last week in the weekly, in the trade room. We had a weekly sell signal on top of it, and we were talking about, hey guys, this thing's getting ready to roll over. The indicators, and I should have put out a sell alert or a short position in the weekly thoughts and observations, but considering the fact we had the Fed and this and that, I just felt this was like more for discretionary traders, so we discussed this in the trading room. Now, here's what's interesting. Let's go over and let me open up my, remember you saw that on the double checking here. When did we get the daily sell signal? Way back here on the 18th. Now let's take a look at something that's kind of interesting. On the 25th, Thinkorswim has an option alert. Somebody bought the September 160 puts for about 68 cents. Okay? And if you take a look at Costco real quick, and we're going to take a look at those SEP options and the 160 puts, and look at the open interest. It's not a huge, now maybe they got out of a little bit of them, but 68 cents, these things went to $3. Now this is the kind of trading that I think we've been talking about. If you look at a 68 cents for right now, you're probably looking at a delta of about, maybe with the amount of time that was left on that option, I'm going to say probably a 30 delta or lower. So probably at that point in time there was maybe 30 some odd days, so the market dropped about $10, so that would be around 147. I'm just doing a comparative analysis more or less of what a 30 delta would look like, just comparing an apple to an apple. So you'd be looking at anywhere from and probably less than that, 157 with that much time. Look at this, a $10 out of the money options of 14 delta with 33 days. So someone bought literally, probably, I'm going to guess, a 20 or lower delta out of the money put option that felt that secure. Now, not many hedge funds or professional traders are taught to buy deep out of the money, extremely sub 30 delta options, but this is the kind of thing that we're seeing on these breakdowns in the market. And I wanted to bring this to your attention. We talked about this, we've been talking about this in the trading room, because all of a sudden now, with time, you're getting some market that stocks that are getting just absolutely berated, and it doesn't really reflect what's happening with the overall indexes. In other words, we're starting to see, I don't want to go as far as a limb and say a stealth bear market, but we're seeing a lot of stocks selling off like this, and I've been giving those lists of stock week after week after week, which is not really reflective on the advanced decline analysis, as you see here. I mean, the advanced decline analysis looks on the S&Ps fairly robust on a daily chart. My volume indicator is not robust, to say the least, and even the on-balance volume is not robust, to say the least, on a daily basis in the S&P 500. So what I'd have to point out to you that we have too many stocks selling off hard, and I mean fast. And so what I think we're trying to accomplish here is, when we get further evidence that this thing's rolling over, meaning the overall markets are rolling to the downside, perhaps we could do a couple things. Add to the spider puts on the October verticals spread, or B, what I wanted to talk about more specifically is, let's say that the market has just one more rally coming into it, like an inhale before it exhales. And so on the rally, if we're in a vertical put spread, meaning we're in the 213s and then the 206s. So I don't have that lined up correctly, but just bear with me. This is the higher strike put, and this is the lower strike put. If we're long the closer to the money option, so we're long this and we're short that one. If the market goes up, both decrease in value. So basically, the one that you're short it will decrease in value. You can buy the short premium at a cheaper price, and we're taking heat on the long option because you bought on a vertical spread. You buy one, you sell one. So take the profits on the one you're short, and that leaves you naked, net, free and clear, a long put that expires in October. So if the market rallies, instead of adding to a position, perhaps it'll be a little bit less expensive at this point in time to do what? Just buy back the short side, and if the market does succumb to a decline, guess what? We don't have the quote-unquote liability of the short put, because remember, they both go back up in value. And so we might, theoretically, this happens multiple times where you get into a vertical put spread like this, and you're wrong. The market goes up, and then you buy back the short side, you're left with the long option, and then when the market comes back down, right, if you break even on the long side, you actually profited on the short side. Right strategy, wrong direction, market call. I believe that the market has potential for one more upside based on the commitment of traders, but I'm here to tell you, folks, it's a lot of stocks are selling off. A lot of names are giving us like some tremendous price depreciation moves, and let's show a couple of them. All right, you know my old way of saying things. In order to figure out where a market might go, ask yourself where it's been. When it comes to indexes, find out what's been strong and what's leading the pack, so to speak. So that's why I look at percentage, relative performance, percentage change. This is relative performance. It tells me the underlying stock. Is it outperforming or underperforming the market? This is Nordstrom, by the way. See this indicator here? It's red. It was telling us earlier back over here in July that it was setting up for a buy, which we had a monthly HCD, and we put that in our weekly thoughts and observations. You can go look at the beginning of August, and it's clearly an HCD that we alerted everyone to. And it had an incredible breakout, and it was starting to see the relative performance of the market. Not to give you a complete lesson on how technical indicators work, but I wanted to just share with you that the market was starting to show a rise relative to the overall market, the S&P 500. When it's yellow, it shows that it's moving up, and all of a sudden it just broke out. But now look what it's doing. It's come off its relative strength, and it's now back to red. So that's a questionable trade, whether or not you would want to be a buyer right now of Nordstrom's, because it's losing its relative strength momentum. And that's important because a lot of names, like we also, this particular week, Lululemon, which looked great, and it had a big rally. But let's take a look at what I have as a theme for you guys, which that theme is stocks that are succumbing to declines, and perhaps this is the time to start looking at, and I don't want to say it too loudly, so don't get mad at me, if you're an option aficionado who has taken a lot of option classes, that knows that buying deep out of the money put options or deep out of the money call options are, a fool's game sometimes. But under the right conditions, those are extremely lucrative. And what are those conditions? Well, this is Lululemon, and here's the considerations that I wanted I wanted to look at. Look at the overall momentum indicator and look at the price. The on-balance volume kind of suggests that it's going up a little bit, right? It looks stronger, but my volume indicator, heck no, something looks wrong with this, right? And I'm sure you see that as the peaks of the price is doing what? It is showing, and this again is a daily chart, it's showing weekly volume, or excuse me, daily in this case, and I'll get to the weekly in just a second, but it's showing divergence in the pattern over and over again. The on-balance volume didn't show divergence. This did, and this did. So the key is, all of a sudden you're at 80, and the next thing you know, you're at 68. This was an intra-week setup, so this is one that came right on the heels of another report, so earnings specifically, but it was warning us ahead of time that things could change, and we're going to be looking at this because this is starting to show evidence that it's mounting, that things aren't great in Camelot. We all saw what happened with Under Armour. It was a great trade earlier this year for us. We bought this back here, and we did actually, if you guys recall, it was another trade. We put on a beautiful calendar spread where we had the August, October, and the market went down first. So what did we do? We liquidated the Octobers, or excuse me, the August, stayed long the Octobers, and made money. It was a great trade. So now what are we looking at? Here's Under Armour. It looks like a little trading range, and sports apparel, the theme is, it's, again, volume down, histogram down. It's another, it's just, I guess the theme is, we better start doing some more homework and scanning for these volume divergences. But mostly, I think we're seeing what was strong fall apart. And that is one of the big concerns that I have here. All right, at the very least, one of my main themes is never buy stocks at resistance. If you look at the, this is now, I wanted to go back and show you the weekly chart on Lululemon. Look at my momentum histogram. As price is moving up, it's going up and up and up and up. The momentum's going down and down and down, which means that the move is not sustainable. Now, look at my histogram component, the yellow bars, and you can see they're moving lower. So while that component right there in itself is divergence, and again, that's a volume indicator. This is predicated on volume, not price. So this is another volume indicator, OBV, and it is showing that the price is rising on accumulated volume. But something's wrong with that picture because my indicator is showing the opposite with the momentum indicator. So this is kind of what's been going on, and bang. I mean, so the key is, let's look, and that's what I want to focus in on, is some stocks that are entering a seasonally weak period of time, or at least are demonstrating on their rallies a loss of momentum, and these types of scenarios. So, you know, in the trading room, I talked about Facebook. Facebook has, it really is one that it has seasonal strength. Let me stop stuttering and get my thoughts. So I don't want to come out and say, hey, we need to get short this thing quite yet. Let me look at and focus in on the on-balance volume first. It has a history of having, and doesn't have a lot of history. It's Facebook, right? It's not been around 30 years. Facebook, in its few short years, has a seasonal tendency of rallying this time of year. So that's the little nuance there that I have to eliminate, right? But when I look at it from a technical perspective, and we've been covering this in the trading room, there was a overnight high up here around 33.5. As the market's rallying, and clearly we're in a buy signal, and I can kind of see the resistances up here, my momentum indicator is going down, my volume indicator is going down, and on-balance volume is going up, offering possibly, again, a stock that we want to keep our eye on, not to buy up here, because everything that I've been seeing lately that's had just incredible declines is coming on these types of divergences with those indicators. So I'm leery of this. I would say we got to use our short-term indicators and look for maybe some reversals, because when it comes, like the daily, because right now the weekly is in bearish divergence. So if we get a daily sell signal, man, that might be just powerful for a nice, maybe, it could easily go 5, 8, 10%. I mean, 10% at 126 is a $12 move to the downside. That clearly would put you back into, the moving average area right where we were in, coincidentally, July. All right, so here's the daily chart on Facebook. And when you look at this indicator and you go, interesting, we closed here. So basically all indicators are based on the close, not absolute high. So the red candle here says it closed here. That's a close, that's a close. So these are the closes, and that's the volume reading when the market made this first thrust. It's gone sideways and is now gone up, and the closes are higher. Look at my volume, lower. Look at my momentum indicator. It's got divergence and it's slowing. Then you got your OBV, which some people might say, hey, it's looking great. It's, it could shoot to the stars. While it could, what I would be looking for, and that's why I can't chase this thing up against resistance. That's just a bad formula. The common denominator with a lot of these stocks that are selling off is they've rallied, they're near resistance, and we've got my proprietary indicators with divergences. That's this combination of the secret sauce that we're seeing some good identities of sell-offs. Once again, quick case study. Look at this. It's near, this is McDonald's, right? Mickey D's. We're near resistance. There's the resistance of red. Market is making a newer high. Oops, the momentum indicator is showing bearish divergence. In fact, it is even going down. The OBV is trending up. My indicator, the volume histogram component, is doing what? Diverging. My moving average is crossing over. This is showing not a lot of love and support, something you want to buy and look for a continuation to the upside. This is something you want to say, hey, let's switch to a daily chart because this is running out of momentum. By the way, as you probably are well aware, the stock's no longer trading at 130. The combination of those, it had a major reversal, a quick, sharp, fast one, and it continues to make downside action. Home Depot, I've been talking about Home Depot and I have no clue what's holding this thing up, to be quite frank with you. This is one that, I mean, for pretty much half the year since April, I've been talking about a credit. We actually made money in this. We did a credit call spreads in there. And here we have, again, newer high, divergences, it's down. My volume indicator is down. Now the OBV this also verifies it is down as well. But I think with Mickey D's, a break back under 132, and I have to, pretty much say it's probably staying in this range and it's going to roll over. So this is a weekly chart. What do we want to do? Watch daily analysis. All right, remember last month we had we had just as many equal share of shorts in stocks than I did longs, right? So remember Triple L, and if you remember Triple L, look at this. Market's rallying, momentum's down, volume's down, OBV was up. Now it formed a low close doji, it snapped back, it came down, but nothing happened. It didn't get any follow through. It was a very weak volume decline. We took profits right at support. By the way, that was a neat trade. Now, in honesty, didn't make a lot of money, but we took out the majority of that range. So it served us well by paying attention to these considerations. And just to make mention on American Tower, we did the same thing. It had what? A very strong divergence formation, but not an OBV. We sold a snapback, we took profits near support, and I haven't revisited since because I need to see a short term, see if this thing's going to roll over and start to define a trend. But we definitely had some good indications based on the tools. Once again, all we did was we were only able to take out the range in a safe trade without having earnings risk in front of us. All right, so now let's finally get to our trades, what we're looking at this week. We have a low close doji, we have a sell signal on top of it, I have bearish divergence, and even OBV is showing bearish. This is almost too good to be true kind of thing. So what I'm looking for is we had a little bit of a wide range sell-off. I'm just looking for a small upside move and try to get short that one as well. And then, as you notice from a 1-to-1 risk-reward ratio, look where the target is, around 79. So that's one that we think is a highly probable trade. In addition, let's look at the seasonality. So I've just fired up the seasonality tool on Thinkorswim, and as you can see here, this would be we start to come into the Caterpillar just looks like it's down all the time, right? I mean, from about April into late October. So selling sell in May and go away looks prevalent. This is the tail end of its worst time to be long the market. You look like by mid September you get some kind of spikes, and then as you get into the end of quarter into October, down she goes, right? That seems to be the seasonal trend. And now let's verify that seasonal trend with using Genesis. Actually, Genesis, looking at the life of history on a weekly basis, barely even shows any upside. It just straight down for the month of September. So when I look at seasonal analysis, many of you know that I like to see if a market is in tune with its seasonal analysis, has it been in tune with it in recent history? And this kind of does look like we've except for a few times where coming in last year it didn't work from its seasonal time frame here. It was supposed to go up, it went down. It's supposed to go down and it went down. It was supposed to go up and it did go up. It's supposed to go down, it did. So it's been acting. We have to go in accordance to a degree for looking for a trade. It has been acting in accordance to its seasonality. Now let's take a look at one other matrix. I want to look at the weekly pivot analysis, and you'll notice here that the blue, the weekly pivot, is below the gold. So it is giving us a weekly bearish bias on pivots. We have a low close doji, a PPS, we have volume, we have seasonality. Again, I think you got to go with hopefully one of the things that we've seen in this year is we get like a buy signal, and then Monday morning on Friday you get a buy signal, and then the market opens lower and then trades higher. So the opposite kind of seems to be happening. You get a sell signal, so maybe we get a little higher push, and that's what I'm looking for, just that Monday higher open, trade higher first, and then start the week off strong, and then come back down and correct, and give us a shot at getting short the market with a high probability exit on the market right there. So as I talked about in this week's thoughts and observation, Caterpillar was conforming to its weak sector, and then Hunting and Bank share, which is in the regional banks. And remember last month, I can't apologize profusely enough for the small profit we made in BOFI, but the Morgan Stanley options should make up for that clearly. And then in addition to that, here is Huntington Bank. While Huntington Bank is in a monthly high close doji, or excuse me, weekly high close doji, the OBV looks strong. Seasonally speaking, it's still in a seasonally strong period of time for a little bit going into September, and it doesn't really do a whole lot. But I think this might be a very low risk trade, and the fact that the whole regional banks still performing well, I think it will give us a shot at decent upside. More importantly, if we take a look here at the annual, the OBV looks good. We're in a monthly buy, and we could easily see the market try to test at least that last conditional change high. So there's some room to the upside with small risk. That's what I like about this. Let's look at our indicators here on Tradestation and see what they look like, right? HBAN. So we're just using a little validation. So looking at my indicator, wow, looks pretty positive. The momentum indicator at this point in time is showing a little bit of convergence, not divergence. It looks like it's formed a W bottom pattern, right? The OBV looks healthy. That's nice. But it's my volume indicator that looks extremely healthy. So I like that trade. It was in a weekly HCD of a sideways market. Looks like a W bottom. First target is minimum. After that, I think, maybe we could see a lot more out of this stock. So that's why it made the list of this. We're still working Bank America, and the reason I'm working Bank America, same reasons, without bringing it into focus. Everything's looking strong. It broke out. This was kind of a W bottom. We broke out of the W peak right here. You closed above that, even if you want to call it a 3-bar reversal. It's in a accumulation mode, and I think Bank America, some people are eyeing 18. I can see better things ahead. The OBV looks strong, but my volume indicator looks dynamic, and it's just been so long that this product, this market, this stock hasn't gone anywhere. my indicators are starting, even on a higher degree time frame monthly basis, are really showing some positive indications that we could see this market move, if not 18, 19, possibly, believe it or not, one more push to try to test even the 20 range. All right, let's look at the other trades that we put out for this week. Avigo, or Broadcom, AVGO. Tell me that doesn't look like a representation of a little bit of divergence after a huge run-up. While OBV looks strong, my indicators, I trust them more, as I've been sharing with you, than I do anything else. Let's take a look at the weekly charts now. So, once again, here we have a huge little upside move in price. Momentum is showing divergence, and my volume is showing divergence. And that's why I put, at least for Avigo, by October, while we do not have a bona fide weekly sell signal, this is one that is losing its momentum, and number one. And number two, let's take a look here real quick. The daily charts. So the combination is what I said I was looking for, was let's look for weekly charts that are what? In bearish divergence scenarios on a higher degree time frame, and then trigger on a short term. What better trigger could you ask for than a PPS sell signal, and more importantly, a low close doji? So that is why I said let's go with an October 21st expiration, the 170.65 put spread. So here's 170, here's 165. We're only asking the market to get down to, if we tap up a little bit here, we're only looking for the market to get down into that zone in time, and into probably the worst time of the year. Let's look at the seasonality of this. Right, so seasonally speaking, by mid-September, yikes. So what we'd like to do is possibly get a little bit of a upside, and then look for the market to roll back down. So we have the daily low close doji. Maybe we get that Monday pop and then flop, right? So the seasonal is on our side. Even looking at the weekly volume analysis suggests on OBV that things may have peaked out. So I mean, if we're looking for a trade, you know, these are the considerations. On a side note, check out the blue is below gold, which indicates a bearish outlay with the person's pivot indicator as well. All right, finally looking at electronic arts, you know, OBV certainly shows divergence, and there's no questioning or denying that. In addition, the seasonality is not one of the greatest time of the year to be buying this stock. While it was a doji, it's what we call a failed doji high, it could see some upside. I want to look at electronic arts, and I just want to go with the 82.5 put. That's the 82.5 put here, and I'm trying to pay 210. In order to pay 210, I need some follow through. Now let's look at the daily chart. So the daily chart does reflect a very strong move to the upside. We are at resistance, and the OBV looks great. However, let's take a look at my histogram indicator. And what does that look like? Divergence on a daily basis. The histogram momentum indicator on price also is reflecting that this is not maybe a sustainable upside move. Now let's look at the weekly. And this is exactly what we want to see. I mean, from a longer term perspective, we've broken out and made a new high. Intermediate term, from this high, we've broken out. Momentum indicator is down. My volume indicator is down. My volume indicator is way down. There's something going on with electronic arts. You know, perhaps it's just got a little rising wedge formation. You can clearly see what I'm trying to outline without the John Madden drawing tool that I'm plagued with. And as you can see here, is that a rising wedge? Well, you'll find out if we break the downside. That's why I think any further upside with this reading here, with that volume reading on a weekly basis, that's why I like electronic arts with the 82.5. We need the market to go up in order to get filled, so we're looking for upside follow through in this one. Last but not least, XLU, which last week we said, hey, you know, this is one that we identified a while back was peaking out, but we chose to go with the XLV instead. It didn't generate a true to form weekly low close doji because it wasn't within the time frame, but it had a PPS sell signal. I still think that, utilities, they trend for a while, and I think that this market may have pulled itself into a new frontier of it's time to get short the market for a prolonged period of time. So, that's my take on the market. I mean, if we look at this, I think it is developing, it's in the developing stage of a trend, and any rallies up against that 50, 51, 18 area can be shorted. Another way of taking that trade is looking at the resistance of 50.92, which is synonymous with between the two levels, right? And so if I'm looking to sell into resistance, again, if I'm looking to sell at resistance, I can take a look at what I shared with you guys last week, the SDP, which is the inverse ETF, which means I want to buy this thing on a pullback and probably closer, as I said, 31.75. So what does 31.75 represent? Just around that green level of support. So maybe over time we get a pullback here. Let's say this market looks like something like that, right? And you get a pullback. It's an ETF, so it's spiky, it's moving, it's got ranges. So it's not outside the realm of A, reality, and B, it's weekly ATR. Look at the ranges it's seeing, right? So can this market spike back down here in the next week or two? Absolutely. So there we have it. All right, we saved the best for last. I haven't done a butterfly spread in probably 10 years. We've just been more directional, and there's been exciting moves directionally in the marketplace. And here's a stock that is about as boring as watching grass grow lately, and it's just not going anywhere fast. Now, I might be trying to thread the needle a little too close with this, but I'm thinking this market's going to still stay stuck in this kind of range right here, with the extreme being here and there. So I think the market stays in for a very small risk. You take a look at this. I have no indication of volume. I have no indication of momentum. It is just deader than a doornail. And there is one thing that I found out by doing due diligence and looking for market awareness, is that Goldman Sachs has got this retail conference that they do, and Starbucks will be speaking. Of course, they're going to talk great things, and they're going to talk about they're in Latin America and they're in all these other new countries and everything, et cetera, and it might spark a short-term pop up to resistance. But I think this is a great strategy to put on, and as I was referring using Thinkorswim, let's look at that Analyzer tab one more time. All right, real quick. Here we have Starbucks, and as you can see, first thing you do is look over here at your implied volatility, then go look at your option statistics and say, well, where the heck are we? 14%, then next week 15.2, so something's going on, then you go up to 16 with time, and then all of a sudden you figure something's going on way out here. But when you take a look at this, you go, we're at the extreme low end of historic and 52-week IV. You can't buy options. You can't sell. The market's not moving. You don't have a directional trade signal. So what are you doing? A non-directional trade signal. So a non-directional trade signal in a low IV market comes up with a butterfly. Nope. Click on step 16. Let's go to butterfly, and just all you have to do is click on butterfly. Since it's not a standard, we have to adjust it. So let's just go with the, we're looking at the 56 in the middle. So I'm looking at buying this. So I've got the 56 already lined up at 2. Now all you have to do is kind of widen the wing, because we're looking at doing a 54. So move this down to 54.5, equidistance. You want to go with the 57.5. Here we go. So notice where it's midpoint 57. Look at the net, 64. So you figure, you know, this is approximately 7 ticks away from the upside. It's probably 7 ticks away from the downside, so 50 cents, and I'm trying to pay 51 bucks or 51 cents, right? So pay 51, so 51 cents, not 50, for each one it's $51 for every one you do. So let's take a look at click on right click here, go to analyze the trade, and here's what we posted, right? So if we you have two things. You got expiring by the 4th. If we get the market up in here, what should the profit area be for this particular trade? What's your max risk? What's your max gain? So it definitely has a good component of risk reward in the trade. So we kind of like the trade in that regards. So that's where we're at with this particular trade. Can the market, in looking at the details, can the market, you know, what can it really do? Well, let's see. All right, well, we don't have a low closed doji, we don't have a high closed doji, and we're just looking for the market to kind of stay somewhere right in here. And we are threading the needle, but it seems to, you know, when it gets up here, it doesn't stay there. When it gets down there, it doesn't stay there. So it seems to, you know, if it cycles from a high to a low to a high to a low, it should cycle one more time and get up into that region. And I mean, quite frankly, that's a strategy. If you don't like the strategy, don't do the strategy. But I think it's got good risk reward outlays, and you can look upon that yourself for further investigation. All right, apart from that, we got the European Central Bank this week. We got Bank of America. We got Bank of Canada. The Bank of Canada's coming out. Euro GDP. The Royal Bank of Australia's coming out on Tuesday. So it's bankers symposium. So these are the guys that were meeting. Don't forget, these guys were just at Jackson Hole, Wyoming. So we're going to see what they're really all about. One last matrix I want to talk about. You know, I look at these foreign market ETFs, and, you know, we've been following FXI when no one was. And, you know, it helped us to identify some really good trades. Number one, if you recall, last year when everyone was looking at Greece, I came back from Italy and said, forget Greece, the real deal is China, right? And so when everyone was saying jump out the window, and we were saying, I don't know about that. We've got, you know, China, you know, if it's supporting here, right? And now China is coming back up into an area of keyword resistance, and oh, my indicators are not developing a strong volume on the weekly chart. So if China, something happens there, and I don't know, there's a G20 meeting this weekend, but something there is kind of telling me that we're going to reach into a little short-term resistance on some of these foreign ETFs. And last but not least, emerging markets. Everyone likes to talk about the emerging market and, you know, what a great thing that is. Well, I don't know about that. You know, we did get a huge volume spike, as you can see right here. My momentum indicator is starting to show, you know, it's showing signs of being tired. And last but not least, we look at Germany, EWG. And EWG, just the German ETF, just by chance, is coming close to a 1-to-1 risk-reward ratio target on my high-closed doji. When that happens, and we're starting to lose momentum, you know what? This could spell for a market to roll over. So I am looking at these other markets, and you know what? I have the feeling that we've got some, you know, reasons to be cautious in the market still. Now, some of the big name boys like Apple, it's in a weekly buy, as you can see here. My momentum's kind of shuffling, not giving a lot of warm and fuzzy feeling. We are at or near a resistance target. Maybe we can go back up, test 110, 111. I don't have any clear-cut volume. The OBV looks good. I can't touch this with a 10-foot pole. I can't buy it near resistance. The momentum is telling me kind of be cautious. You know, the volume's not giving me a huge amount of confidence one way or another, and I'm less and less as the months, weeks, days go on, trusting OBV less than I have before. And as I think I've pointed out, a lot of multiple good case studies as to the reasons why. When I see the daily chart, you know, we're in a daily little buy signal. The OBV looks positive. My indicator, both my momentum study went positive, and as well the volume indicator went positive. So maybe it's got a little bit of upside. I mean, I kind of think we like this type of pattern: up, pull back, and then buy signal breaks out. But you know, with the weekly analysis, you know, it might go from, like, say 107 and change to 110, 109, something like that. I think, you know, a 2-3% move. That's all we're seeing in a lot of the markets here, and I don't want to get tapped into following this for $2-3 when I might have other stocks that could be falling, you know, $5, $10, $15 pretty soon. So I can't short it, and I really struggle with trying to buy it here, but I would point out to you it does look strong short term. And then if you want to look at this thing short term, turn to your 60-minute chart for a quick swing trade. You might get, I mean, the volume looks pretty good there on my indicator. The OBV kind of looks good. So possibly, where can we get to? Yeah, maybe we test, you know, what would that be, about $2 to the upside or so? $1.50, $2. So it might be worthy of watching early in the week next week. Other big name stuff, Alibaba, which was a monthly high close doji in our work, it's starting to lose its momentum. Look at my volume here. I can go on and on and on about stuff that I think is, like, here was our high close doji, which we posted last month. I can't buy it now. It's hit the objective, so I got to just hang tight. Last is Amazon, the behemoth, the big behemoth. It's at resistance. My momentum indicator is moving down. I'm starting to show a lack of follow-through on strength on this rally. On the weekly chart, by all means, if you have been watching these histograms, you note that here we have a significant, like, a 2x4 hitting us over the head. Should we be focused on buying this thing or looking for short-term sell signals pretty soon on Amazon? So while the OBV looks great, this is just a tremendous divergence that tells me to watch out, as is the histogram. So with that said, I hope everyone got exciting education, or at least something to keep your eyes open. Maybe exciting is a bad word, but at least a follow-up on the weekly thoughts and observations and things that we're looking at for this week. Thanks, everybody.